This episode, as with all episodes, exists thanks to the supporters of the show who contribute a mere $3 per month via patreon.com/copytradersclub. You can too. It takes 2 minutes to sign up and you probably won't feel it. What you will feel is a warm, fuzzy feeling of helping out a little independent podcaster who creates a show you enjoy and get value from. Patreon.com/copytradersclub. Thanks for listening and thanks for your support. Copytraders Club, where you can learn how to make better decisions and more money copy trading. I'm Gavin McCauley, my name and username on eToro. Today we talk to a PI who has a surprisingly low profile considering he's been around for a long time and has a large number of copiers. Here we go. Season 2, Episode 16 of the Copytraders Club podcast, and as always, my aim as an eToro enthusiast and copy trader is to demystify this new and uncharted world of copy trading, understand what are the pitfalls and best practices, and how ultimately to succeed as a copy trader. In chats like today's, the aim is to answer all your questions about this popular investor and reveal more about them than anywhere else, so you can assess whether they might suit you. In this episode, we talk to Kieran Wilkinson, aka knw500, an English PI with an impressive academic background and a strong following on eToro. Let's find out more about this mystery man as he comes stepping up the stone staircase of the Copytraders Clubhouse. Kieran, hello. Welcome to Copytraders Club.
Hi, it's great to be here. Thanks for having me on.
We're delighted to have you on, and we'll be delighted to get you into the VIP lounge, past security, when you answer a series of quickfire questions. Ready for those?
Sure, let's do it.
Username on eToro.
knw500.
Date you joined eToro.
December 2017.
Date you became a popular investor.
February 2020.
Year of birth.
1994.
Place of residence.
United Kingdom.
Profession.
Data analyst.
Briefly state what you aim to achieve on eToro.
I hope to beat the S&P 500 over a long period of time and have minimum downside volatility in that same period.
Name one of your investing heroes.
Jim Simons.
Name one of your favorite investing books.
The Man Who Solved the Market.
That completes the formalities. Let's proceed into the VIP section here at the Copytraders Clubhouse. Kieran Wilkinson, aka knw500, are you ready for this magical transition?
I certainly am. Let's do it.
Okay, Kieran, here we find ourselves in the sumptuous VIP lounge in the Copytraders Clubhouse. I think you're our first guest from the Northeast. How does it feel to be in such opulent surroundings?
Yeah, it's fantastic. It's great to be here. I'm quite surprised I'm the first person from the Northeast. That's interesting.
Well, I think you are. You're certainly the first that I've been aware of that's from the Northeast. You're from a little place called Seaham, or Seaham.
I pronounce it Seaham.
Which is 10 kilometres south of Sunderland, but is in County Durham, correct?
That's right, yeah. I live almost on the border with Sunderland, but I am technically in County Durham.
So do you consider yourself a Makem?
It's a difficult question. Kind of. So I was associated a lot with Sunderland, so I went to school there and all of that. So yeah, I would say I do. even though technically I'm not really.
And for our international clientele, can you explain what that question means?
Yeah, so people from Sunderland, they just get referred to as Makems. To be honest with you, I'm not sure what the history is behind that. Maybe you know more than me.
Well, it's from the shipbuilding days in the northeast, where they used to build the ships in Sunderland and then take them up to Newcastle, where they would be fitted with engines and things like that. But the basic construction was done in Sunderland. So the Geordies used to say, they make them and we tack them. As in, they make them and we take them.
Yeah, that's really interesting. I didn't know that, but you've obviously done your research. So,
well, I did do my research, but I knew that from before. I wondered why Sunderland Football Club's unofficial nickname was the Makems. And I found that out years ago. Surprised you don't know a man of your intelligence, Kieran.
To be honest, my history is not great, but I should have really looked into that more. Yeah, now that you've said that, it makes a lot of sense.
What doesn't make a lot of sense to me is there's a very badly named beach in Seaham, isn't there?
There's the C-class beach. Could that be what you mean?
No, I mean chemical beach.
Ah, okay.
According to Google Maps, there's a chemical beach.
Yeah, so I do actually know a bit of history about that. So this was back when we used to have a lot of mining in Seaham, coal mining. And there was actually a mine right near the beach, this beach that you're referring to. And essentially it's became very discolored over the years because of all of the chemicals and everything that was coming out of the mine and basically just going onto the beach and turning it a horrible color. And that's where the name comes from. And it's actually featured in a couple of films over the years. So it looks like it was actually in an Alien film because it looks so like otherworldly, if you like, because of the color of the ears of all of this kind of chemicals coming from the beach, coming from the pit. So yeah, not great, but it's got a lot of historical significance.
Very good. That's interesting. So Seaham is on the northeast coast of England. And do you live somewhere along North Road there, looking out across the sea to Denmark?
Unfortunately, I don't have a sea view, but I'm just probably about a 5-minute walk away from the road that you're referring to there.
And you just told me you used to live in Denmark?
Yeah, so I moved abroad after I finished my PhD. So I lived in Denmark for about a year, and I was doing postdoctoral research over there.
Well, my connections with the Northeast are limited. I used to have a girlfriend from Newcastle, and I once went up there for a wedding, which was very entertaining. I don't know if any of this will make the final cut of the podcast, but I'll tell you anyway. There's two things I remember that wedding for. One was the father of the bride made a very unique speech. He got up, he's a Geordie, Newcastle. He got up, took the microphone, and he said, "I'd like to thank yous all for coming." And then he sat down again. That was the end of the speech. Shortest speech I've ever heard at a wedding.
Short and sweet, yeah. It's always good.
And then we had a big party, and the next morning, everyone came down for breakfast in the hotel, and every table had multiple men wearing either a Newcastle United shirt or a Sunderland shirt, which I thought was very hilarious.
Yeah, we're very passionate about football in this part of the country.
Absolutely. Okay, so you just mentioned there briefly what you were doing in Denmark. Can I just give a little bit of detail on your impressive educational background, which is relevant to that? You have a master's in theoretical physics and a PhD in computer science, and you worked, until recently, as a researcher in quantum technologies. Now, just to clarify for the listener who may not be as knowledgeable in these things as you and I, quantum technology is an emerging field of physics and engineering encompassing technologies that rely on the properties of quantum mechanics, especially quantum entanglement, quantum superposition, and quantum tunneling. So I'm glad to have clarified all that. Can you put quantum mechanics any more simply than this definition? Quantum mechanics is physics at an atomic and subatomic level.
Yeah, so in physics, we kind of split, if we work in quantum mechanics, we split two different types of physics. So we have classical physics and then quantum physics. So classical physics describes everything that we see on a day-to-day level, so the world around us, on a kind of incorrect scale, but to a degree of correctness where we can make accurate predictions about how things behave around us. But when we go down to a very small scale, those kind of models that we develop for the world around us don't really work anymore because things behave very differently at that level. So this is where quantum mechanics comes in. And quantum mechanics is basically the mathematical model that we have to describe how things behave on a very small level. So there's a lot of interesting results. So we essentially found that what we see, you and I, on this level where we live is very, very different to how things behave on a small scale. So we can make very accurate predictions about things that we see day to day, but we can't really do that on a small scale. We can only really say that something might happen with some probability. We can't be sure that something's going to be somewhere. So
many parallels with the world of investing there.
Exactly, yeah. So I've dealt with probability and that kind of thing a lot, and I think that's come in very useful with my my career now as a popular investor on eToro.
Very good. Well, the other big question I imagine the listener will want to know is, how excited are you about the recent demonstration in India of a quantum key distribution link for a distance of over 100 kilometers over commercial-grade optic fiber? Is this highly secure communication a significant breakthrough with many real-world applications?
Yeah, I think this is fantastic, and it's actually something that I was working on, this field of quantum key distribution. So this is a way of essentially transferring a secure string of information, which you can then use to share further information. So it's basically encrypting data, but it's using the laws of quantum mechanics to encrypt data, which is highly, highly secure. It's almost unhackable. So you can see in this world that we live in now, where we have such threats of cybersecurity, you can see how something that would make that kind of claim on security would be incredibly useful, because it means that we can transfer information securely without worrying about eavesdroppers or malicious parties intercepting that information.
Wow. Well, as Kieran recovers from being so impressed at the quality of questions so far, we're going to delve into how I came across you, Kieran. And the answer is a pretty common one. It's from a Felix Falix review, which was done in December 2020. His conclusion was that Kieran's not a flashy kind of PI, relatively low-key and consistent, a solid 8 out of 10 on most metrics, was his key quote. How do you feel about that kind of summary?
Yeah, I think I also watched the review and I was very happy with that. I think that's the kind of approach that I go for. My long-term goal is just, as I said, to outpace the S&P 500 with minimum downside volatility. I don't claim to make ridiculous returns of 100% every year or anything like that. But if you invest in me, what I try to deliver is consistent results with minimum worry on your side, because you don't have to worry about that downside volatility as much. So yeah, I think that was pretty much the perfect summary.
Okay, and let's go from perfection to imperfection when you tell us something you're very bad at.
Yeah, so this is a good question. I think that one thing that a lot of people would say to me is that I don't make fast decisions in the real world, which is interesting because I think that in the world of investing, I do make fast decisions. And I think the reason for that is because I can see all of the information there I can look at the company and analyze it and say, okay, this is a good investment. I can know the risks and everything associated with that. And I can say, okay, this is a worthwhile investment. I'm going to make the decision right now. Whereas in the real world, I think that things aren't quite as clear as that. There's always uncertainty. I mean, there's uncertainty in investing, but you can kind of quantify that. In the real world, it's much more difficult to do that. So I have on occasion been kind of paralyzed by a difficult decision. And I think that's something that I don't deal with very well.
Okay, let's have a question from the art of people. Can you give me a number between 1 and 10?
7.
7 again. If you weren't doing what you're doing today, what would you be doing and why?
So I think what I would be doing if I didn't go down the path of maths and physics is I would have liked to have gone down the medical path. And one thing I think I would really enjoy doing is surgery. So a lot of people are kind of repulsed by the idea of this, but I think that it would be an incredibly rewarding career path where you could essentially save someone's life. So I think that if I hadn't gone down the maths and physics routes, that would be something that I would have loved to do. But I'm sure as a surgeon, I probably wouldn't also be a popular investor because I'd probably have absolutely no time to be spending on that.
And how good a surgeon could you be if you're not good at making real life quick decisions?
Well, I think that in surgery, it's almost similar to investing where you're kind of in that mindset where you have to make decisions and there's not really any margin for error there. You have to go with the best decision based on what you can see at the time. And I think I can do that.
Okay, Kieran. So this is the part of the conversation where I ask you to turn your attention to your profile on eToro and read from your bio. Can you just read from your passion for mathematics down to global events?
My passion for mathematics has led me to develop a strong interest in the workings of the stock market, which has enabled me to develop and refine a trading strategy. I focus mainly on value investments. I look to buy or sell an asset based on my calculated assessment of its value. That depends on a variety of factors. I am particularly interested in market under and overreactions to global events.
Now, that begs the question, are there any overreactions going on today?
I would say so, yeah. I think that there's an element of looking ahead to the future, as there always is. But at the same time, we have to put things into perspective. So we've seen a couple of fairly small rate hikes, which personally I don't think will make too much difference. But to go along with that, we've seen a huge drop in the market. We've seen something like a 20% drop on the NASDAQ. And I think that right now that is an overreaction. So that's not to say that in the future things won't have to be very different. So for example, we could get more rate hikes in the future. But I think right now, as things stand with the current rate, to have a huge sell-off based on rate hikes is a bit extreme.
Okay, let's have a quick look at your overall results so the listener knows who we're dealing with. As you say, you joined eToro at the very tail end of 2017. So 2018 was your first full year, minus 10%. Then 2019, 55%, 2020, 47%, 2021, 8.5%, and 2022, year to date, as of this recording, minus 10%. Now, one of the most interesting things about your results, and this was mentioned in the Felix Falix video, was that during the great COVID crash, you did really well. In March of 2020, you had over 9%, and in April, almost 6%. Walk us through what you were doing in those months.
Yes, so I always say that at this period of time, I was very high confidence in what the market was going to do. So I saw that the pandemic was kind of starting at that point, and the market didn't really react at the start. So my kind of plan of action was to look at the volatility index. So the VIX, for those who are familiar with it. And the way that I could do that with eToro was to trade on the VXX exchange traded notes, which some of you might be familiar with. And what the thought process I kind of had was that if the market hasn't already reacted to this pandemic that had already started in China, then when it finally realizes what's happening, it's going to move in a very big way. And that was my thought process behind looking at the VIX, because I expected it to jump based on the volatility when the market started going down. So, I actually got that one pretty much perfectly right, luckily. And the VXX grew by something crazy like 500%, maybe more. And those positions pretty much just dominated my portfolio at that time and undid all of the losses that I made on the other investments that I had, my long-term portfolio. And this is why we see positive numbers for those months.
So you didn't sell everything else and concentrate only on the market movement and volatility index?
No, so the way I kind of structure my portfolio is I have a kind of core portfolio where I have all of the stocks that I believe in for long-term growth. So mainly tech stocks, because that's where I believe that growth is going in the long term. But I don't like to sell these and then try and time buying them back at a better price, because there's a risk then that you miss a great opportunity to buy, and then before you know it, the price is back the way you sold and you've just lost a position. So what I try to do instead is hedge against losses on those positions. And this was the idea here of trading the VXX, to just undo the temporary drawdown on the core portfolio by hedging with this asset. And things did probably go a lot better than I expected. I didn't necessarily think that I would make profit in those months with the pandemic, but because the VXX moved so significantly, I did end up making a profit. But the main idea there was to protect the long-term portfolio against a sizable drawdown in March and April.
Okay, let's have a look at your copier numbers and assets under copy. As I have to start saying, copier numbers currently 2979. Assets under management, I can't see from here. It's between 2 and 5 million. Do you have the exact number?
It's exactly 3 million at the moment.
Okay, and your copier graph. The copier graphs aren't much use these days. I'm never sure what period they're over.
Yeah, I think they've changed it. They used to show the whole period, I think, when you were a popular investor, but they've changed it now. I'm not sure either what it shows.
Well, I can see a decline. That's what the decline in copier numbers is, all the graph is telling me. What was your highest copier number that you had achieved? 3,500?
I think it was more. I think at one point it was over 4,000. I think this was during the when the GME thing happened. I got a lot of new followers then because I was one of the most copied PIs. The new users on the platform were copying me during that time, but I don't know the exact number.
Trades per week and average holding time. Trades per week. The stat here says 23 trades per week. Average holding time 2.5. How do you react to those stats?
So for the first one, the trades per week, this is quite a volatile number. So in periods of high volatility, I'll tend to trade more because a lot more opportunities for short-term trades do present themselves in those times. So that seems about right. The average holding time, again, this is slightly skewed because I do have kind of two parts to my portfolio. I have the core portfolio and then the short-term trades and hedging. So a lot of my long-term positions have been open for over a year now, possibly even 2 years. But that is then balanced against short-term trades, which could be in the region of 1 day to maybe 2 weeks.
Can you give us a little opportunity to peer behind the curtain and let us into some idea of what your watch list looks like on eToro?
Yeah, so my watch list, it mostly consists of tech stocks. I tend to look at the biggest moves in the market. So if something has a bad earnings report, for example, and drops maybe 10, 15%, then I'll usually put that in my watch list. And if I believe in that company, then for me, this is an opportunity to get back in at a great price. So I'll tend to watch it for a few days, see how the price moves following that big move, to see if an opportunity comes up to buy, and go from there. So it's mainly stocks like that. I don't have any kind of stable ETFs or anything like that. It's mainly things that are quite volatile.
Okay, let's move on to communication. I see one video of you in YouTube where you're introducing yourself. And I see that you've done a number of Zoom meetings with high-value copiers. Is that an eToro-led activity?
Yeah, it is. So every quarter, I hold one of these talks. This has been going on for probably about a year and a half now. So, but more recently, they have been open to general copiers. So you can see that one of the posts on my profile right now is advertising one of these talks for anyone to join. So I do encourage anyone who's interested to join next time. I will be posting the link, and hopefully I'll also be posting the recording for those who can't make it to the actual event.
That was going to be my next question. Have you any plans to make those available so people can get to know you a bit better? Because you're a bit of a man of mystery, I think. There's one video and then there's posts and all that on eToro. But, quarterly videos, it should be quite easy to release that content, no?
Yeah, so this is a broader point, which I'm looking to work on a lot more in the coming weeks. So I want to kind of make myself more known to my copiers. So I'm looking to post more videos, general market analysis, that kind of thing. But yeah, as a starting point, I will definitely be looking to release these quarterly meetings, because I do a lot of economic analysis and also analysis of my portfolio. So I think this is very useful for those who are copying me and maybe want to know what I'm looking at in the market and how I'm changing the portfolio on a monthly basis. So I think, yeah, as the first step, I'll definitely be releasing those for you guys.
Okay, and posting on eToro, I had a little look at your feed to see how frequent your posts are. It looks like it's at least monthly, maybe a little bit more frequently than that. And the tone of the exchanges on your feed, the interactions with copiers, are almost all very respectful and calm. It struck me. Now, is that calmness a reflection both of your portfolio performance and your own communication style? Or to what would you attribute this atmosphere of civility?
Yeah, it's a really good question. And it's something I'm very happy with, because I know that a lot of PIs have a lot of trouble with people interacting very disrespectfully on their profiles. So I think from my point of view, I do try to reassure people as much as possible in my posts. So when something bad happens, I'll kind of put it into perspective and say, this is just a blip on the long-term timeline, and it's not something that we need to worry about too much. And I think just generally trying to reassure people as much as possible changes their mindset. So they might look at your post in a kind of mood where they're going to go and say, what's happening? I'm seeing a huge drawdown in my portfolio. But if you say, this is temporary, in a few weeks we'll have moved past this, it's just a little bit of bad news, then that changes their mindset, I think. And then they maybe either won't comment what they were previously going to comment, or they'll interact with you and ask a genuine question, which I can then come back to and offer a solid answer to that. And I think this is what helps with that interaction.
Yeah, I guess in the same way voters get the politicians they deserve, PIs get the copiers they deserve. And because your portfolio is designed to provide reasonable rather than earth-shattering returns, your copiers' expectations are more likely to be reasonable, I think. And because your communications are very measured and regular, but perhaps a little infrequent, they don't feel the need to contribute too much either. I wonder, is that a theory that holds up? Because of how you pitch things, you've got the kind of copier base you want. Is that how it feels to you?
Yeah, I think broadly speaking, this is the case. Maybe when I got a lot of copiers in one go, when I was growing at the start and things weren't quite as straightforward as that. But I think over time, a lot of those copiers have left, and I've been left with those who believe in the core values of the portfolio, which is that we don't necessarily gain huge returns every year, but we outpace the S&P 500 and we minimize the risk score. And I think that those people do have the expectations, like you said, of not expecting the world and also not expecting too big a drawdown. And so they then know what to expect from me, and they appreciate when I post, but they don't necessarily come after me when we have a, say, 1% drawdown.
So if my theory holds up and you start doing more videos and more interactions like that, that might alter the tone of the communications, or maybe the frequency of questions you get on the feed. Because the more of you there is, the more of them might follow.
Yeah, so I think that this is why the content I'm looking to produce is a very particular kind of content that they'll appreciate. So it would be going into depth with market analysis, kind of talking about what I'm doing with the portfolio to not eliminate the drawdown entirely, but to minimize it. So like effective hedging techniques and maybe a rotation between sectors within the core portfolio and that kind of thing. Whereas I won't go into a video saying I'm going to do X, Y, and Z and everything's going to be fantastic. There's going to be zero drawdown and we're going to get 100% returns every year. I'm going to say I'm going to do X, Y, and Z and I'm going to minimize the drawdown and we're going to get a reasonable return that beats the S&P 500. And I think that they would appreciate that.
Yeah. Do you think some PIs maybe overdo the communication, or do you think there's a sweet spot where it's not too much and it's not too little?
Yeah, I think so. So I think that if I posted every day, I don't think all of my copies would be there waiting to read every post that I came up with. I think that they appreciate maybe monthly or twice a month communications where I give them a solid roundup of everything that's going on. And I think that it probably varies a lot between PIs based on what they're investing in. I can imagine that certain portfolios would benefit from more discussion with the copiers. But yeah, I think it's probably dependent on the PI, but I think at least once a month is a good rule of thumb for communicating with your copiers to make sure that they're kept in the loop with what you're doing.
And your other platform of choice is Twitter. What do you use Twitter for?
So the idea behind Twitter was to communicate kind of short-term ideas with the copiers, but I don't use it as much as I would like to. This is another area where I would like to be communicating more with people on there, but things tend to happen so quickly in the markets that before you know it, a tweet that you had planned isn't really relevant anymore. So I might have to change around what I use Twitter for, but I'm not sure what the direction of that will be in the future.
Okay, so we're going to take a closer look at your portfolio and how it's built to provide these returns and to keep the copiers in a worry-free state. Right after this.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Okay, so let's dive into your portfolio a little more, Kieran. Let's talk about asset allocation first of all. Last week's guest was 100% stocks, and you're very different. Stocks 55%, ETFs 22%, indices 15%, currencies 6%, and crypto about 0.5%. I'm assuming that's not because you invested in Luna.
Yeah.
So you have 68 positions as of the time of researching. In the invested column, the largest is under 6%. And all of those outside your top 5 are under 3%. So that gives the listener an idea of the portfolio and the position sizes. It also means any de-sync is likely to be of limited impact. However, I always look at de-sync, and Apple for you today is close to 5%. And for a new copier, it would be under 1.5%. So that's quite a disparity. That's due to a 200% rise in Apple's stock price. I recall in the Felix Falix video, the portfolio was showing over 1,000% rise in Tesla. Tesla is no longer in your portfolio. But given those two examples, I'm guessing the issue of de-sync doesn't keep you up at night.
Yes, so you raise a very good point here about one of the main limitations with the Popular Investor Program. It is something that I have thought about a lot. One of the problems I had was when I needed to add funds to move up the tiers of the Popular Investor Program. I was getting a lot of messages from people who were struggling to keep the portfolio in sync. And since then, I've done a bit more thinking about it and also spotted these issues that you raised. So the Tesla one naturally disappeared because I sold my Tesla position ultimately. But the Apple one is something that I think about, and not just Apple, but things like Nvidia, where that's also seen a significant rise. What I'll probably do ultimately is close these positions and reopen them so that new copiers can be kept in sync. The only annoying thing about that is just having to pay the spread fee again when you open the new position. But as you said, with most positions, a general rule of thumb for me is to open new positions with quite a small position size and add to that position if I still believe in the stock. So I tend to have quite a lot of small positions, which are great for bringing people on board and making sure that our portfolios line up. I also make sure that when I open a new position, that position will be copied by those who are copying my portfolio with the smallest amount allowed by eToro, which I believe at the moment is $200.
Okay, so let's talk about your portfolio composition. It's very interesting to look at it. You have a little bit of everything. It strikes me, long and short, some value plays, some tech, some volatility instruments, some old school companies, bit of bonds, bit of dividends, some innovation, which tend to be smaller positions, mostly US, but some UK, some oil and gas, some renewables. It seems that balance is at the heart of your portfolio management.
Yes, and I think one of the core principles that I invest by is that I shouldn't limit myself to one particular investing style. If there's value in different strategies, like, as you said, emerging markets, bonds, ETFs, then why not try and capture as much of that value as possible? So that's why I don't commit to a 100% stocks or 100% ETFs-based portfolio. I try to include as much as possible, but as you said, in a balanced way. So I don't want too much of a risky asset or too little of a high-risk asset. I try to bring in as much as possible to capture different parts of the market, but in a way as to keep the risk score as low as possible.
Yeah, I was going to say, it's almost as if you never take one step Every action you take, you look to take an equal and opposite reaction, in a sense, in order to keep the correlation limited and therefore your risk score down. Oh, funny you should mention that. We didn't mention your risk score earlier, did we?
No, I don't think so.
Somehow we skipped over that, but it's a very important point because apart from the last few months when everyone's risk score has risen a fair bit, you're pretty much an average and max 3 kind of guy, which is very consistent, very low, and considering your returns over the past 3 years, 3.5 years, that's a very high risk to reward ratio, a very positive one. So you're all about keeping uncorrelated assets side by side. Not even uncorrelated, but what's the term? Yeah, it's not quite inverse correlation I'm talking about, but for example, if you've got oil and gas on one position and then you've renewables next door to them,
yeah,
it's the same area, but they don't move in unison.
Yeah, so there'd be some correlation, or there might be some negative correlation, but it's not like a direct one is negative of the other. Yeah.
I saw an exchange on your feed. Hi, Kieran. I'm looking to potentially copy you soon, but noticed you opened a couple of sell positions on SPX 500 and DJ30 back in January that are in red, and more recently the NASDAQ 100. Just wondering what your intended plan is with these positions. And your answer was, hi, these positions help protect against turbulent times in the market. As the indices cover a broad range of the market, they are useful at protecting against my chosen longs on specific stocks. So, put simply, you've got a number of stocks that you're long on. You're hoping to see their price rise over time, but you've also got short positions on certain indices. Explain that to the listener.
Yeah, so the reasoning behind this is that, as I was saying before, I have a core portfolio of stocks that I have high confidence will grow to a great degree over time. But as we've also seen very recently, we can see huge drawdowns in the market, like 20% very recently, and having a short position on the broader market helps protect against these. So these positions that we discussed in this comment are actually doing very well at the moment. They've grown quite significantly, which I would say is why my portfolio is only down 10% relative to the broader market, which is down something like more than 20%, I believe, on the NASDAQ in particular. So that's the reasoning behind this. I wouldn't necessarily have a short position open all the time, but when I believe that there'd be a drawdown or a high probability of a drawdown, then that would, for me, would be a reason to open a short position.
Yeah, that's what I was going to ask you. Are these shorting indices a permanent sort of fixture in your portfolio, or it's only when turbulent times require it? But you've answered that, so that's great. Here's another question, though, kind of similar in a sense, but I think the answer is a little bit different. Possibly not. QQQ is an ETF that tracks the NASDAQ 100. If you think the NASDAQ is going to do well, you would buy that. Think it won't, and you'll short it, i.e. adopt a sell position. There's also TQQQ, which tracks the NASDAQ 3 times, built-in leverage of 3. There's also the SQQQ, which is a short on the NASDAQ times 3. So 3 very different options there for investors, depending on the price movement they anticipate. Now, you currently have all 3. A sell position on QQQ, a buy position on TQQQ, and a buy position on SQQQ. So someone might look at that and says, oh, Kieran thinks the NASDAQ will go down. I mean up. No, I mean down. So explain why it looks like you're backing 3 different horses there.
Yeah, so the key thing here is the leverage on these ETFs, and also what I expect to happen in the short term, and then moving through to the medium term, and then the long term. So right now, as we saw a couple of days ago, we saw a jump in the Nasdaq and the other major indices, and I tried to capture this movement with a buy position on TQQQ, which is, as you said, leveraged 3 times. So for short-term movements, you can use this leverage to capture some value there in the short term. But at the same time, a buy position on SQQQ allows you to capture kind of a medium-term move down, which I expect to happen in kind of the monthly time frame. I think that there's a bit more downside potential on the Nasdaq, and having a leveraged ETF allows us to capture some of that value in the medium term. And then for the long term, as a protection against the core portfolio, it doesn't make sense to use a leveraged ETF. It makes a lot more sense to use a less volatile route, which is just to short the most stable one of the ones that you mentioned, which is just the QQQ index, which tracks the Nasdaq.
Okay, so in both those answers, you're highlighting the reasons why you have these assets over different time scales. And these sort of moves, you think, contribute to why you haven't experienced the worst of the downturn. Are there any other aspects of your portfolio that contribute to the fact that your portfolio has done relatively well in these turbulent times?
So one thing I would highlight is that I tend not to put too big an allocation into the riskier, more volatile tech stocks, which we've seen in a lot of different portfolios, because I think that if we do get a kind of period of high interest rates, or at least medium interest rates with several rate hikes in the near future, then tech is obviously going to be one of those sectors that gets hit very hard. Not necessarily fairly, but I think that that's what would happen. So what I've tried to do more recently is to move kind of out of the tech sector. So you can see this, for example, with closing the position on Tesla, which had done very well over recent years. And I focused more on less volatile tech. So Microsoft, for example, Apple, which I wouldn't close. And I've moved out of the riskier stuff, but also into other sectors, which I think will do better. But mostly when I've moved out of the tech sector, I've moved into ETFs that represent other sectors, because these are obviously subject to less volatility because they represent a collection of stocks. So instead of just investing in one single stock, which I might not necessarily know much about, if I don't know much about a sector, then I can get exposure to that sector by buying those ETFs. And ETFs are naturally less risky than having a lot of stocks.
Yes, just to give the listener an idea of your largest holdings, your top 5 positions. First is a sell position of SPX 500. Second is a sell position on DJ30. Third is a buy position of GBP USD. Fourth is a buy position on the ETF ISF.L, which tracks the FTSE 100. Your fifth position is, as you just mentioned, Microsoft. And as you say, a lot of the more speculative tech names that are in your portfolio tend to be smaller position sizes. As I scroll down, I see all below 1% names like Block, Virgin Galactic, Baidu, Etsy. Oh, Tesla's still there. There's still a little residual 0.5% of Tesla.
Yeah, it's a sell position. Yeah, I opened that recently. I forgot about that one. I've gone full circle.
was sort of struck by when looking at your portfolio, perhaps more than most others, was you seem to be someone who thinks a lot about portfolio management. Where did you learn all this stuff? And where did your approach come from?
So this is all self-taught, but I think that in terms of risk management, my background in mathematics has really helped with that, because I can understand correlations between assets and volatility as measured by standard deviation. So when looking at a stock to put in the portfolio, I automatically think about these things and how the overall risk score will change when I put that in. So I've said throughout the entire time that I've been on eToro that the risk score is the main thing that I think about when I'm managing the portfolio, because overall, the most important thing is to not be overly risky at any particular time, especially with the long-term nature of the portfolio, because at the end of the day, the idea here is to invest over the long term. And I strongly believe that risk score is key there. If you can keep that risk low, then you'll do well in the long term, because I strongly believe that the market will continue to go up. So if you can minimize those periods where the market doesn't go up, then you're automatically onto a winner there.
Tell us a little bit about your best ever investment.
So we touched on it previously, but it would definitely be Tesla. It was up over 1,000%. I think it touched about 1,200% when I closed it. I believe I bought it just after it had been downgraded by an analyst. Unfortunately, I can't remember the specifics, but the stock price took a huge hit. And I've always been a strong believer in electric car technology, so I took that opportunity to take quite a large position at the time. It did represent quite a large portion of the portfolio, and I just didn't sell for a long time. I tried to hold on to at least some of the position for as long as possible. As things got better in Tesla, I did sell parts of it, which probably would have been worth a lot of money now if I just held on to it. But the goal was to lock in some of those profits, which again links back to keeping the risk as minimum as possible. So not having a huge position in a volatile asset like Tesla. But I did hang on to the last little bits of the position, which ultimately grew to by about 1,200%. So that was definitely my best trade.
Fantastic. And you've shown that you're not a man of sentiment, given that you're shorting it now.
So I think that what we hear a lot is the famous quote from Warren Buffett that you should be fearful when others are greedy and greedy when others are fearful. And this is something that I try to take into consideration as much as possible. And this is why I thought that now was the time to sell Tesla. It's with sadness that I do that, because I do really strongly believe in the company. So this isn't like a long-term thing. This is purely short-term, because I think that right now it's overvalued. But if I get an opportunity to buy back into that, I will take that immediately, because I think that long-term Tesla is a fantastic investment still.
Okay, and rather than just allowing you to revel in your success, tell us also about your worst ever investment.
So the worst one is probably to invest in the Russian ETF quite recently. So unfortunately, I just got this one completely wrong, as I think many people did. I just didn't think that Russia would invade Ukraine. I thought that with the threats of invasion, I thought that was just a bit of posturing going on. And when the stocks got absolutely hammered, I thought, if this invasion doesn't happen, there's a huge upside potential here. But unfortunately, as we all know now, it did happen, and the Russian stock market is, well, pretty much it's disappeared. So yeah, it's difficult to say that that was a sensible investment, but there was at least a thought process behind it. But yeah, that has to go down as my worst investment.
And that's the ETF RSX?
Yeah, that's right.
Which I'm just looking at in your portfolio, and it sits just below Coinbase, which is another bit of a stinker at the moment.
Yeah, that's true. That's not to say that I don't necessarily believe in the company. I think that probably what I did wrong there was to invest too early. I think that it has good potential for the long term, but the valuation upon reflection was probably way too high when it first entered the stock market. So I think lessons were learned there to not invest too early. But at the same time, I was thinking, with all the mania at the time, it was easy to see how it could go even higher than its valuation at IPO. So there was a bit of that in there, but unfortunately it just didn't materialize. But still, long-term potential is there, I think.
Okay, we're into the final furlong here, Kieran. Let's talk about your copiers. Who should copy knw500?
I think anyone who wants to do better than the S&P 500 on average, but is also looking for something that's a bit less risky and a portfolio that's managed to minimize risk as much as possible. So that would be someone who doesn't want huge drawdowns, but also isn't looking for short-term huge gains, a more balanced approach to investing over the long term.
Yes, you're sort of presenting yourself, if I can be allowed to say that, as a sort of safe pair of hands in many ways. Don't do anything too risky.
Yeah, I believe so. I think that I've put substantial effort into making the portfolio as safe as possible while not losing too much of that potential value there over the long term. So if that's the kind of thing that appeals to you, then I would certainly recommend copying.
And what makes you so special? That's a question. That's a question I have written down here. What makes you so special?
Yeah, this was the one I wasn't looking forward to. I would say that my background studying mathematics for a long period of time has made me quite a refined investor. I think that I always place risk score at the center of the investing strategy, and I think that's quite uncommon right now. I think that a lot of people invest based on maybe a sector that they're interested in, or maybe they're only interested in dividend stocks or ETFs, whereas I won't be afraid to diversify into any sector where I believe there's value, or any asset class where I believe there's value. But that's all grounded by the risk score. So I think that the risk score is at the heart of everything I do trading wise, but I also try to capture as much value as possible.
What role should you as a PI play in a copier portfolio? And can you describe that ideal portfolio with you in it?
I'm a big believer in diversification, as you can tell. So I would say that in any portfolio where I feature, I think that I should also be included with either other PIs, and there's a lot of fantastic ones out there, or some other stocks or ETFs that the investor is also interested in, to help diversify things and make the risk as small as possible. And my role in that portfolio would be to keep the returns solid over time with minimal drawdown. So on the upside, I would add a lot of value there and hopefully beat the returns of the S&P 500. But on the downside, I would also keep things relatively stable in that portfolio.
Are there any changes you would like to see to the platform?
To talk about risk even more, you can see how much I rely on it. I think one of the things that is lacking on the platform right now is more of a helpful description of how the risk is calculated on eToro. And maybe even just before you open a position, if the platform told you how that would affect your risk score, then I think that would benefit a lot of users. And it would also benefit me because I wouldn't have to go and try and work that out for myself, which would save me a lot of time. But overall, I think that trying to help all of the users understand risk score better would be very beneficial.
Would it be beneficial to have Sortino ratios public?
Yeah, I think I would like to see that change. On my fact sheet as a popular investor, I can see my Sharpe ratio, but the Sortino ratio isn't really mentioned. So I think that would be a nice addition. But I also think that the Sharpe ratio being featured on the actual popular investor page would be nice, so that those who are interested in that kind of metric could look at that, and that could inform their decision to invest in a popular investor.
Especially for someone like you who prides himself on being a good bet in terms of risk reward.
Absolutely, yeah. But I think that is something that is important for anyone to see. So if you're investing, you want to know what the risk you're taking by investing is getting you in terms of value. So I think that's quite a foundational thing that everyone should be able to see before they invest.
Okay, I'm hoping you're going to give me an interesting answer to this next question, because it often fails to elicit an interesting response. But what other PI would you say you know best on a personal level?
So unfortunately, I don't actually know any other PIs on a personal level.
That's always my fear when I ask that question, because that's a very common response.
Yeah.
Well, you may not have met them for full English breakfast down CM Coast Road, but I mean, presumably you communicate with some online.
So before I became a PI myself, I used to copy a few PIs, and one of those that I really have a lot of respect for is Wesley. So I used to be a copier of his who would often look at the posts he was putting out, and I still actually see them come up from time to time now and find them really interesting. And I think that his style of investing is really great. The way that he picks his stocks is very commendable. So if I had to recommend one PI, I would certainly say Wesley. And hopefully I'll meet him at some point in the near future now that COVID is kind of behind us.
Yes, I copy Wesley and have every confidence he's going to get back up the charts as soon as possible. Hope you're listening, Wesley. Okay, Kieran, we're on to the final question. If you could pick one question that you wish I had asked you during this chat, but I haven't, what question would that be?
I was thinking about maybe like my outlook for the economy, or maybe like a few years in the future.
Sure, without giving anyone financial advice, tell us what your views are for the economy going forward.
So I think that this year it's important to be quite conservative around investing, because we are coming through a period of very high inflation, and I tend to think that the Fed is going to have to do a lot more to get inflation under control. But I think that this also presents us with a huge opportunity to invest for those who have kind of looked at the stock market recently and thought everything's just so expensive, I don't want to get involved now because there's such a risk of a drawdown. And I think that after this year, we'll probably be at a price level where if you invest in the stock market and look back in 10 years' time, it'll probably be something that you are delighted that you took the decision to at that point, because we could see price levels where, well, who knows, we could see the kind of levels where we were several years ago if things go badly. So I think that this year, try and protect against the drawdown as much as possible, but then get ready for a fantastic buying opportunity in the fairly near future.
Exciting words there from Kieran. Let's get our bathtubs ready. Get out there for when it's raining gold. I wonder, do you agree with this assessment? You've been around quite a long time, really, on eToro. You're kind of flying beneath the radar, but you've maintained a good number of copiers. That Felix Falix video from December 2020, I think it was. And you've got more copiers now than you had then. So you're just shy of 3,000 copiers. You've got quite a long track record. and you're still quite up there on the PI ladder in terms of copier numbers. Is flying just below the radar your intention? Are you happy doing that? Are you happy with me giving that assessment?
So don't get me wrong, I would like to be back on the editor's choice or in the top charts as I was a couple of years ago. But at the same time, I'm very happy with the community that I have at the moment, with the copiers that I have. I think, as we were discussing before, they all understand the strategy and they believe in the strategy with me. And I think that's why I don't get a lot of copiers who leave at the worst times. So, a lot of copiers will see a fairly large drawdown in a portfolio and they'll leave at that point and lock in those losses. I think with me, that's kept to a minimum because everyone believes strongly that we can make money over the long term. So I'm really happy with that community. But at the same time, I always want to keep growing that community if I can. So if the opportunities to do more things like that came around, so to bring in more copiers came around, then I would definitely do that. But at the moment, I'm happy with the community that I have, and I hope that I can keep continuing on this track and generating high returns for those copiers.
That sounds like a good place to leave it, Kieran. Thank you so much for being with us here today.
Thank you for having me on. It's been fantastic.
And best luck in the future. I'll be keeping a close eye on you to see how you progress throughout 2022 and beyond.
Sounds great. Thanks a lot.
That was Kieran Wilkinson. I feel like I, and hopefully by extension you, dear listener, got to know a lot more about Kieran from this chat. There's certainly plenty going on in his portfolio. Definitely not a buy and hope strategy. It will be interesting to see if his increased use of videos brings him more copiers and whether it has any effect on copier communications compared to his approach thus far. That's all from me. See you on Discord and Facebook. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit chat. We don't know your individual circumstances, etc., and so forth.